So this call is an introduction for those who just joined us. You guys are welcome, and I appreciate every single one of you for seeing me and choosing me as your mentor and someone who you look up to in the forex market. So what I'll be doing today is giving you the basic introduction as to the strategy I use, as to every single thing I use, right? Probably might not tell you guys every single thing, but I'll tell you the main things that I look out for when I'm on the charts, right? And to do that, I actually have to go, use a pair to explain stuff to you guys. So I'll just say that I don't actually, I don't actually trade. It's like a long time I traded. I just started one pair now, and I remember it's been a long time I traded it. So I'll just use that as an example, right? And that'll be ADSD. So I know this pair is one of the major pairs. I think this is a very cool pair actually, if you ask me, because he has low. Oh wow, this happened. Look at that. That happened way long. So this is one of those pairs that when you're actually trading it, it gives you like low spreads, it gives you small stop losses as well, because you don't have to risk too much, especially on ADSD because of how it moves, right? When you check out the 5 minute, you'd see that this movement, let's just say this week movement, is what about 4 pips. And entry points of interest, you have imbalance here. These are not pair I would 100% recommend as well to actually learn, because this is a very nice pair and it works so well with the system. The system works everywhere, but this one really works nice in AUDUSD. So
you said that was an imbalance and you marked that week and lined up with another week?
This? No, this is something else. This is the one I was supposed to record imbalance.
Oh, right there.
Yeah, you said.
Okay, so if you look left, right? Wasn't that area right there?
This one?
Yeah, that whole move down.
This move already was right. This move was already filled. There's no inefficiency at this point.
Right.
Okay. So that move was filled and there's no index. This is one. This one, liquidity was taken, and that made this become the lower high, and then we have a breaker structure, a breaker structure, and then this became a lower low. So you then understand that what you need to do is the intercept.
Okay. I have one quick question, right? So I'm working a course called RCB, right? So what he says in the imbalance is exactly what you just marked, but what he does is that he says look left because pricing is filled already.
Okay.
So sometimes he doesn't use that. So I don't know if he's right on that or not, but
do you know the thing about the market, yeah? The thing about market is the fact that one thing is not everything works in different ways. Alright? People reach differently. Imbalances can be treated differently. Okay? But I wouldn't say that what you learn already is wrong. What I can say is that's his own way of doing it. And that doesn't mean it's right. That doesn't mean it's wrong.
Really right how in market, like the two week, and one.
The thing about it is something you've got to learn from practicing. It's something you're going to learn from experience. It's not something anyone can teach you.
True.
Yeah. So that's why. So let's go on. Yeah. So I said I was going to do like a top analysis on this pair. So let's go straight to business.
Of course.
So first thing I look out for, So first thing I look out for is structure, order flow, and liquidity. Okay? Structure, order flow, liquidity. So, looking at the 1 month now, because that's what we're on, the monthly time frame. Now, looking at this monthly time frame, what I can see is that we have this created a low higher high, higher low, higher high, right? A breaking structure, okay? But not really a bigger structure. You know why? Because they only just decided to take out liquidity, a lot of liquidity actually, right? So even if it's going to be a bigger structure, there's going to be a very nice pullback. So right now, we're bullish. Okay, because we can say that this move was just a complex pullback. Okay, now complex pullback is when liquidity needs to be taken. So at this point, the market looked at supply and demand. Now, when you have the last supply or demand taken, is right here. And do you know why it's there? It's there because you can see right there, you've got a drop page drop, signifying supply buddies, right? Can you see it? Can you see it?
Yeah, what about the supply again?
So, let me dig into it. So you said you have a drop base drop, which is supply level. Okay?
Yeah.
So prices come to this supply level and it's tested it. Let me make it 2. So you see what I'm saying. So right here,
yeah,
we'll call it holding supply. Okay? That's what we'll call it. Now that we know that's a holding supply, when did demand take up supply? That's the question. And wherever demand took up supply is where price is going to come back to. So I'm going to say that this base, because that was the last base that was created before we broke out of that area. Okay? So I could say that this area is where I expect price to be jet from. So that's my final interest at this point. Because what was holding supply got broken by demand. And so therefore, demand is in control right here.
Yeah.
So let's see if price got in. Okay. So you see how we tapped into the area. I think at this point, they used both base candles. So I'll use both base candles so that it looks neat. Okay?
Yeah.
So let me check out the 2 more. We've got something. I'll make this look nice. Oh, okay. This is what I should have used. Something. Okay?
Yeah.
Since that one wasn't really, so let's say we tapped into this other flow.
Yeah. And that's like an OB too, right?
Yes. So, what do we have here? We have a perfect test.
Yeah.
Okay? So, that's where you can become a for interest. Right? You're not necessarily going to snipe this. Nah. Never. Alright, don't do that. The best way to do it is wait for the structure to happen and then back. Okay? And right now, you're swimming in profit because you understand what you tend to gain. Okay, 1,700 pips. Alright. So now, this is inner structure. Okay, that's what this is, because what price is here, lower highs, lower lows, lower highs, lower lows. Inner structure, but this is the major structure right here. So what we have here is liquidity. Okay, we have another supply level right there. You know why? Because this was the previous demand level where you could fall holding demand. And at that point, holding demand was broken, which created this supply. So price comes in here, supply happens. Price comes in here, supply happens. Right?
Okay, so how do you know that was a demand level?
What'd you say? How did I know that that was a demand level?
Yeah.
Because you can see the change in movement of price. Price was about to fall, but price continued to go up. So there's demand then.
Okay. Gotcha.
Right? So that's why.
Yeah.
You'd see, if you can want to see a lot more, you'd see on this champion. You can see you want it to fall, but demand happened. So when demand showed up, coming back here, price broke demand, supply broke demand. I'm definite that if you go into fractals off of this, you would see a supply body, either a drop based drop or a sponsored candle. So let's go into the weekly. Well, I say you'll either see a sponsored candle, a base, or supply body, and this is a rally based drop, which is a supply body. Okay, so knowing that that's a supply body, here's what I'm going to do. I'm going to now take this base as the last movement that was formed from this demand before price order. So that is the last order flow. And last order flow has now been tapped into, and you can see sales happen. And then again and again, what happened? They've collected a lot more orders, a lot more orders. So right here, they have 3 orders sitting in here for sales, and that is what too much liquidity needs to be taken. So at this point, price is going to have to break this zone, approaching this area. So we can see that we're going to be bullish continuously.
Right. Can you tell me a little bit about sponsorship candles and mitigation?
Okay, so the thing is, the same way you treat your other blocks, when you left an institution fund, it's just the same thing with you. I don't know why people change names, but I learned it that way, and so I just want to keep it that way.
Yeah.
You get it? So that's why I call
So you're saying OB is the same thing as mitigation?
Yeah, it's all the same thing, you just switch names.
Yeah. I was wondering.
Yeah, so it's all the same.
Yeah.
So, I'm going to say here. Alright, let's go back to the monthly. Alright, so now we're here on the monthly time frame. What do you observe? What should be the first thing you should look out for, actually? You know what the first thing you should look out for? Is structure. Alright? What is the current structure from this mitigation? That's what you should look out for. And then you might want to decide to go on the daily time frame, so you can see a lot more price action. Okay? So, right here, we have a first bullish move, and if we were, let's say for example, if we really needed to see a break of structure this high, when it was taken, it would be a very nice break of structure, isn't it? A very nice for the break. So what happened was, you can see how holding demand, holding supply showed up here, and the demand broke it. So right here, I'm definite that this is a quite interest for maybe the future, maybe when price drops from that area. Buys are going to come here, and the buys are going to be strong because of this movement of price at this point. That's just something.
So is that like an area where supply became demand? You see that area that you said was good if it would break?
Yes, supply became demand right here. And when price comes back here, in the future, that could be a very key PI.
Right. PPI? Wait, say that again?
Point of interest, PI.
Okay.
It's just the same thing that happened here. You can see this, right? It's the exact same thing. You can see it. Holding demand. Holding supply, rather. Demand broke it. What was the last SC that broke it? I guess that's it.
Yeah.
Right? That was the latest one that got tested actually. It just helped me analyze stuff ahead of time and actually see where we are currently. So thank you for that.
Right.
So yeah. So what I can now see is that this order flow has been maintained, and so therefore we're bullish at this point.
Yeah.
Okay. So we maintained order flow, but one thing that I know is the order flow that was taken right here is unmitigated at this point. A new entry, there was no re-entry, basically. That's how I put it. But anyways, AUSD is headed to set and break this high. Like it's definite that we're gonna get a break off that high. You know why? We're gonna break the high because we're bullish. Okay?
You said you can't. We may or may not break the high.
We will.
Yeah.
Because we're bullish.
Because if you don't, yeah. Okay.
And according to schematics, according to recall, this is an acceleration.
Okay.
The price took more demand, and that's why the sales happened, because they wanted more demand.
Okay. Alright.
So there's something called cause and effect in recall. So the cost for this and this, what do you expect the effect to be? This.
Okay.
So for something to happen, something has happened. So for this price to continue to go bullish, based on the fact that prices, the market doesn't just go like this, right? If not, everyone will be buying every single day of their life, right? And making money because it won't be traced, it's just linear. But they can't do that, so they have to push price regularly, but with structure, right? So at the point, when they push it, when price, let's say for example now, okay, so let's say for example, they came here, there was supply at this point and they wanted to sell, right? But a new bullish order was created there. And as soon as that order was created, what happened? They had very nice volume of demand, very fast, right? And so you call it inefficiency, so you call it imbalance and all of that. So what happens is there is a cause and effect. This right here was a distribution, right? And then what made price to do that. So now the price has dropped. This is the effect of this cost. Now what's happening here is liquidity created, liquidity grab, breaker structure, bullish momentum, break of scalp and both significant structure, and then price goes all the way up. Alright? So this is demand, and you can see time and time the market taking more demand on this. For example, let me show you one. Right here, we have holding demand, right? Or holding supply rather. But you can see that when we broke out that area, price came back to test what took it out within fractals, which made price go bullish. And so what price came here was create liquidity, get higher loads, collect more orders from this order, continue again. Right? So every single price action at the moment is pointing towards what? What direction?
Up.
Up, right? Exactly.
Yeah.
Right now, we don't have anything telling us to sell, do we?
No.
So why should we be selling? Alright? That's what you should think, and that's the psychology you should put yourself into. Don't trade against the market until the market tells you that it wants to. Trade with the market as long as the market is moving in the direction that you see it going into. So when you're watching the order flow, you then know what you need to do if you want to intraday trade, because actually I don't advise anybody buying somewhere around here because anything can happen. What advice is, this is where you should be buying. Alright? If you go in, this is where you should be buying. But then, this is the last place to buy. You only buy when price gives you high low again. Alright? But for now, what you're looking out for is possible sell out of trend trades.
So, I'm glad you picked this pair because this is actually the pair I've been showing my friend.
Okay.
And, I would have traded that thing down, you know, from that point, once it hit that, area that you marked at top, yeah, once it hit that, I would have sold.
I guess you would call it this thing.
Yeah.
Alright? And so, therefore, you would say that price is going to reject it. Price could do something like this, you know? Price is very funny. Price could do something like this. Decide to take out liquidity, and then continue like this. Which is another. You know what this is? This is a mirror image of this. Alright? But understand where to exit and understand that you are counter trending against the trend.
Okay. Because here's my thing.
That's what we do. We just get lucky.
Here's my thing, and it's really silly. So, I have a thing for double tops and double bottoms.
Yeah.
Like when I put a profit, that's what I traded. So I kind of need to like unreal or real myself on it, and focus more on structures and movements and not be so down to looking for those structures as well.
Yeah. Okay, so this is it.
Yeah.
So now, like I said, we'll also anticipate possible rejection points. So let's look left now at this point. And let's examine this area. Now, do you see what I just did? I was on the weekly time frame, I wasn't seeing anything. Right? And so I switched my time frame. Alright? So when you find yourself not seeing anything, don't force the perspective. Check a different perspective and see if what you're looking for, you now see it. Okay.
Yeah.
All right. Here we go. So here's holding the one. Right. That's what I'm doing. Once you have the one going through, so therefore the base is supply. Okay.
And when you say base, you just mean like the bottom of the wick?
No, the base is any short wick candle, just like this.
Oh, okay. So, if that were if you flip that and that was like a down candle, then we would kind of do the reverse in marking it.
Okay. I don't want you to get confused. Just listen here.
Yeah.
I'm going to show you examples of bases, right? Because that's what you was after.
Okay.
So right now, let's look at examples. This is a base. This is a base. This is a base. Right? This is a base. Okay, that's what I call it.
Yeah.
I have other names, but that's what I call it. I'm just showing you every type of base. This is a base. This is a base. Are you noticing the similarity between all of this? Just people, right? You can see how they have less volume.
Less body?
Yes.
Yeah.
Right? So they have less body. They have less body. They have less body. This is also a base. Have less body. And that's why. Do you know why they have less body?
Because you took that liquidity?
That is a very good answer. I didn't even think about it now. That is a very good answer. That's the right answer. That was really smart.
Thanks.
I don't know, but I think I need to see something through the
You're starting to get lower. I can't even hear you.
Oh, I think, oh shit. I think I just mistakenly cleaned out everything that we did.
Oh no.
Okay.
Go up and undo everything.
Right?
Go up, yeah.
Nothing.
What was it on FX again?
Yeah, it was.
Oh,
That's okay.
okay.
I still have the same thing anyways. Because I'm gonna be. Yeah. So, let me just take this out.
Wait, so let's go back to that candle that you said was a base, right? I'm looking at it. Right. It was a slightly bullish candle. Yeah, that's the one. Yeah. There's one. If you look left, there's one just like it, right?
Yeah.
Yeah. Look left, and look for the other one that looks just like it.
This one?
Look left, right? Left. Go left. Yeah, that's what I'm talking about. Look left. The other one, the other bearish one. Yeah. So that would be a base to it.
Yes.
You're looking at this differently?
Yes, because look at what happened.
Yeah. My reason for asking that is how you mark the bases. Because I noticed when, when you see the mix of a candle, like for example, the first base that you showed me, the reason why it was bullish was because it closed higher. So this one closed lower. Do you mark this base differently than you do the bullish base? Because I noticed you mark the wick and the body like at the top, but do you mark it at the bottom and the body for the bearish one, or do you just mark it the same?
Okay. So this is one of those things which you're gonna have to learn yourself, which I can actually teach you to learn.
Yeah.
Because all of this stuff I do and how I draw it is just based on impulse. Like I don't think about it. I just look at it and just do it. Because I practiced it and I backtest it. And so in backtesting and practicing, I just knew how to draw it and took out this. If that makes sense. Because usually when I was taught to do it always like this at the end of the weeks. That's how I was taught. That is actually the right way to do it. right? But then, like, you leave room for too much risk and you leave too much uncertainty, right? Because this is too big, isn't it? But it still says supply level and can see supply, As a matter of fact, if investors just bought here, sold here, and as long as they had their stop loss right here, right, they will always win the trade, right?
Yeah.
So that's how they did it. But I can't do it this way.
Right.
Yeah. So I just have to find a way to reduce it every single time. And so having done that, you can still do the rejection from here, from this higher one. Okay, so what this was, you just captured excess liquidity. That's what it is. Make sense?
Yeah, makes sense.
Alright. So because I've done this before, and that's why some of my macros are still there. So it's the same thing. Right? Like I said.
Yeah.
So liquidity was taken here and pricing bullish. And so now we're headed back into the supply to break this structure. Okay, I'm going in there to fill in more orders because we have a lot of unfilled orders in there. Can you see it? Can you see this unfilled order flow?
Yeah. You said order fill?
Order flow.
Order fill, yeah.
What happened here was liquidity was taken. Okay, from this order flow, liquidity was taken here from this order flow. Alright, liquidity was taken from this order flow. So here, order flow was very sharp this point, but we had an unfilled order from this liquidity graph, right?
Yeah.
So in that case, that could be a sell for interest. So that's it. Exactly, that's supply. So that's it. So looking forward to what happens around there if we're going to get sales. Although it could be a counter trend trade and it could be just a reason to take out the equity you saw there. So all the equity on the small side. So what are we looking at before? Page 4. Okay. Just to make it out. Do not get greedy, and there's no reason why you should start getting into buys here or anything. Just allow the market give you the sell. Okay? Again, that's another thing. Yeah, just chill out for the sell. I think the sell is really happening. So the trade now is waiting for price to get to the smaller interest, and when it does, watch out for a break of structure and then sell.
Right.
Okay?
Okay.
Yeah. So that is in a nutshell. Not really, because I don't think you should start learning Wyckoff now. I think you get good at reading structure first.
Yeah, sure.
Alright. So there'll be a time when you should start looking at that, and that's when you're good at reading price direction.
I do.
Right?
Yeah. Alright. So my question, which is like, well, in line with what we're doing now, is I want to know your take on volume, momentum, also using Fibonacci if you use it, and how you use it, and also like correlating volume and momentum, because I know that they can be similar sometimes.
Okay. So what I'm going to say to that basically is, volume mentioned, they all come with Wyckoff.
Right.
Alright? But they're applicable to Wyckoff. And it's when you start to read and understand how to use weaker, and that's when I'm going to talk about volume and mention for the way that you can understand. But I'll just briefly say something, just an idea. So whenever there's whenever there's a trading range, that's the only time you look out for volume. Alright? So when there's a range, look out for which of the moves within the range shows more volume. So you see, for example, we're in a range right here. Okay? And according to this volume, this is gonna be the range. Alright? Now, when you look at this right now, what do you observe within the volume? You observe that there are different amounts of volume and different heights. That's the first thing you observe, isn't it? But then, when you look at it, which one is showing you high momentum? Alright, which one? So you get to see that there's something we talk about one of the laws of Vickers, which is laws of volume basically, which is when price, direction, and volume is in correlation, then the trend is going to continue. But when there's a divergence, then the trend is going to change. Okay? So this very movement right here, this very movement right here from a color interest, this is the volume, right? This is the volume right there, right? Now you can see that price at this point started to diverge, which is volume, because we had something like this, isn't it? For us, where is it? So for us, that volume right there, is low, okay? And you're seeing something different at this point, because you have correlations and you're expecting to continue, but instead you see a difference. The moment demand shows up in the market, you have that different price. So this volume only indicates which one is stronger and actually tells you what's happening after a trading range. So you get to know which, like for example, are you in accumulation, are you in distribution, or what kind of stuff you do. So this is just the basic understanding, but there are deeper things to know about it. And that's why I wouldn't want to talk about it now. Until we really go deep into understanding how to read calculation. All these things do not really matter, they're just secondary. Right? They're not really something that you must look up for. I don't even look at them. Like the only time I look at them, like 2% of the time. So I don't even care about them. Basically, because ordinarily, just by reading structure, I don't really need to understand what volume is saying, what momentum is saying. But I could use it as confidence, right? That's the only thing. Just use it as confidence. It doesn't really mean anything or tell you anything much because it is delayed. Trying to think about it. It only shows you after a move has happened. So it's a little bit delayed. That's one thing indicators will never be use accuracy. And this will give me accuracy. So, and I just rather not use it and use something that's simple so I don't complicate stuff on my charts.
Yeah. Actually, the only indication for, indicating something like that, the thing that's not lagging is divergence. That's all. Everything else is lagging.
So yeah, that is just a basic summary of how we look at this chart and all. So right now, the trade to wait for is a possible counter trend set. And that's going to hit that area. And then you can see this maybe we would come back to take this liquidity, retest off of what the other four is left here, and then continue. Just like we did here.
Okay. So what for liquidity was it to me? Cause like my percent of liquidity is when I stick. And that's pretty much it. What you showed me there, it just shows like, candle with a lot of body, but fast movement.
Okay. So liquidity is what moves the market. Do you know what liquidity is? Liquidity is money. right? That's what it is. And so because it's money, money is dumped for every sell and buy. There's money out there. Okay? And so money moves price. That's what it is. Liquidity creates structure.
Yeah.
Okay? So because liquidity creates structure, some certain orders are that are in debt, for example. For price to move down, this order has to be in debt, right? And so they take it out and then it becomes positive. Okay, leaving the other one in debt. So they're trying to make sure that there's equilibrium on the market, thereby having debt and I know what we call the opposite of debt. Yeah, I know you get the point. So that's the thing. So when they see some sort of debt somewhere, they decide to take it and create a new one.
Yeah.
That's it.
Nice. And lastly, do you use Fibonacci? I'm not big on tools like that.
When you use Fibs, the only thing I use Fibs for 50% of anything.
Yeah.
You can even look at my Fibs. Like, there's no other thing there.
Yeah.
So that's it. Just like to keep things simple.
Yeah.
Alright.
Maybe you could have like a foundational session on White House.
Yeah, that was a very hard this year. For everyone who's joining, I really want to see the conference in about 6 months.
Yeah.
So you guys to read more price action.
Like an overview though. But yeah, I'll just do the recommendation. I'll let you know. Everything else is all collected. Thanks so much for this. This is awesome.
You're welcome. So I'll see you guys tonight, alright? The whole foundation about how I trade this thing. So it's just watching price action, structure, liquidity, and all of it. So it's just us keeping it very simple and sweet.